All right, welcome back, everyone. Another Sunday Market Outlook live stream. The purpose of these outlooks help prepare all traders and market participants for the upcoming week. We're going to check data releases, fundamentals. We'll talk about crypto, and I'll show you some of the trade ideas that I'm watching. Before we get started, make sure to grab your tickets to the FX Summit 2024. Yeah, fuck the commercials. All right, let's get straight into the Sunday Outlook. Um, Manufacturing PMI, unemployment claims. All right, nothing too big on the fundamental side. Definitely just got blocked off YouTube for cursing in the first 15 seconds. Okay. Um, I'm gonna go through NASDAQ. I'm gonna make this a pretty quick stream. I was gonna cover all the news events, but honestly not in the mood for all that. Um, we got some room left to go, people. Very, very likely that we break these lows. Market open with a gap to the downside. Sellers still in control. We've been looking at these lines of defense. This one right here. We have another one right here. Bear with me, y'all. I'm doing this live. Haven't really checked the charts this weekend. All right, I'm looking for buys at these two levels here. We'll go through this in more detail later this week, but just going to go through very quick idea of this. So market's been on a retracement cycle for, let's see how many months. Well, just about 3 weeks or 4 weeks. Much needed retracement. Haven't really had a deep enough retracement in a while, probably since April. So as you guys can see, we go months of bullish action, then about a whole month of a retracement, month of bullish action, about a whole month of retracement, month of bullish action, about a whole month of retracement. At some point, we're going to continue back to the upside. I'm looking at 17,805 here on the Oanda chart and 17 17,250. So this or this, and I'm looking for the full recovery back to the upside. If we break the lows, a lot of people are going to start to panic sell below this area of support. This will be my last line of defense to go long. I'll wait for the market to liquidity grab, retest back inside the range. And of course, I'll keep you guys updated as the market gets closer. But just so you guys can write down those levels, it's 17,850 and 17,250. Okay. Let's do the DXY. We had a pretty bad employment print last Friday. So markets are in a bit of a panic. Folks are kind of using this as an opportunity to offload on a lot of dollar assets. So we're seeing the DXY on a massive retracement right now, probably back down to the 101.3 level. So this could last maybe 3, maybe 4 weeks. Okay, so the dollar dropping. Gold super secret magnet zone still being respected. Let me do a full analysis here. My bad, guys. It's been a tough weekend. Um, I was just telling the team before this, I'm considering stopping live streaming here soon. I'll probably continue streaming for the members for a little bit until we figure out what to do with Chart Addicts. But this might be the last stream I do on YouTube this week. Okay. I'm way too fucking generous, man. I'm way too generous to y'all. How the fuck can it get any easier than this? If you looked at this without anything I just did, you'd probably be a little confused about what the fuck is happening here, right? Members, you know exactly what's going on here. Okay, so retest 24.30. That's the entry. Stop loss below the wick. All right, now we did close below this area of support, but we are going to see this model one rejection. Well, this is technically model two, but we're going to see the model one retest. So we can either hit TP1 and reject all the way down, or we hit TP1 and then break through. Either way, 24.30 is the buy entry. That's what it is. I took this on Friday. Good stuff, Roman. Model 2.
I'm waiting for the sweep, and then I've got it on the reassurance more conference.
Beautiful. That'd be just like this. Anytime, any place, same deal. Buys right here. And that's why, Roman, I was looking for the retest right there. Break back and recover above the lows. Okay. Can someone double check? We're still streaming on YouTube, right? I ain't trying to read all that. Damn, this one got me pretty blown. I gotta get more focused. I've been waiting for this trade for about 3 years. Didn't think it would happen so soon, but doesn't look like the yen is going to stop anytime soon, especially with the Fed not making a decisive move on interest rates versus cuts or interest rate cuts in September. We're likely to see the Japanese yen overperform the other currencies just because of they've been basically overprinting their currency for about 5 years with zero interest rates while the rest of the world was raising rates. And so now that they started raising rates while the rest of the world is cutting, then this is going to overperform all the other currencies. All right, good looks, y'all. Looks like we're still live on YouTube. Okay. More downside for NASDAQ. More downside to come for NASDAQ. Interesting. We'll probably get this rejection in the next like 10 minutes. Not 10 minutes, sorry. In the next like hour or 2 hours. It'll sit here for a while. People will start to load up longs. It'll shoot down real quick. People will panic, and then it'll recover back up to TP1. That's too much sauce for today. All right, Bitcoin's finally making its way back down to the 40,000s. Never wrong. Sometimes just early. All right, sometimes I'm wrong. Euro USD pushing to the upside. It's counter correlated with the DXY, so or with the dollar in general. So if the dollar is dumping, then we're going to see Euro USD go to the upside. Very straightforward stuff. Do you guys have any pairs that you'd like me to cover? Any specific news events you'd like me to cover? That's a pretty quick stream. Yeah. Yeah, I'm not reading the YouTube comments anymore. If you guys want to ask a question, ask it in the Zoom chat. YouTube can do whatever the fuck it wants to do. Euro JPY finally coming down. So euros down, Japanese yen up, dollar down. If you're Forex trading out here, very straightforward correlations. You have the Japanese yen moving to the upside because of that interest rate move. You have the Eurozone just all kind of moving in the same pace against the other currencies because of the interest rate cuts. And of course, I haven't checked the Canadian dollar in a while, but if I have to take a gamble, a gun to my head, I'm willing to bet that the Canadian dollar is dropping and that all Canadian pairs are going up. Let's try that real quick. AUD CAD should be going up. Maybe not yet. Let's do Euro CAD. Well, Euro's also dropping. So this one's not going to be a good measure. So the Canadian dollar is doing way worse than the euro. So even though the euros are all crashing, the yen is doing that much worse. GBP CAD. Okay, this one's bullish, just like we said. If the US dollar is dropping and the Canadian dollar is dropping, then it wouldn't be as obvious as to what USD CAD is doing. But if I have to take a massive gamble, I would say that the Canadian dollar is dropping more than the DXY. So USD CAD should be bullish, even though the dollar has more volume. Okay, makes sense. So at least on the currency side on Forex, everything is making sense and everything is at least functional. Um, no, I'm missing one. Oh, CAD CHF. Okay, that makes sense. That makes a lot of sense. We have CAD JPY. Wow, this is the pair. Oh, I didn't even put that together. So we have two currencies moving in the opposite direction, and you take the most aggressive of those two currencies that are moving aggressively in opposite directions, and you have Canadian JPY. You have the Canadian dollar falling off a cliff, and you have the Japanese yen booming to the upside. CAD JPY was the trade of trades. Shout out to anybody that was watching this. This thing's still got some room to go. Wow. As a trader, y'all, something that you'll learn is that no matter how good you get, if you're distracted or if you're busy and you're not able to capitalize on moves, doesn't matter what you saw in advance or what you called out or what you predicted. If you're not there to make money, if you fall asleep at the wheel, then probably one of the more the less how do I say it? That shit fucking sucks. Okay, you're just basically watching the market go, can't chase it, and so you have to just basically accept the circumstances. Yeah, damn, all good. Um, S&P 500, Israel receiving bomb threats. Israel's been receiving bomb threats since 1948, Retta. And then it's not going to stop for the next 100 years either. I'm good on things. Answered the question I was going to check about the DXY targets. We'll do S&P 500. Okay. The SPX. SPX basically following US 30. Should I say US 30 following SPX? Well, no, actually. S&P following US 30. US 30 is the top 30 stocks in the S&P. But since the top 30 stocks are basically the market movers, S&P 500 is going to lag US 30 just slightly. This is very reminiscent of the NASDAQ chart. where we have several areas of structure that the market is approaching. And the question is, which one is it going to reject from? For members, when I first started developing the strategy, I first developed it on S&P 500, and then I found that it was way cleaner on NASDAQ, which is why I ended up switching over. So it's just as valid on S&P. Okay, I got entry level 1, extension level 1, and entry level 2. So Mike, same exact thing as NASDAQ. Find structural lows, find the retracement levels of those structural lows, and then you can either scale in at each level, so you can do tester, and then if it dips through, enter full position. You use your entry model at each level to minimize risk. That way, if you enter a tester and it crashes through, you're not taking big losses buying at every support. You're risk managing. That goes to everybody listening too. Divergence between U30, NAS, and S&P? No, because it's too unpredictable. So the only correlation that's ever happened is the Fed's balance sheet. So I kind of just laid them over. There's over a 95% correlation between the Fed's balance sheet and the performance of the indices. So that's why I kind of use money printing as my indicator of measure for stock market performance. All right, y'all. I'm getting off the stream now. Good to see you guys. Drop a like. Catch you later. So. Members, stick around for a second. If you guys have any questions, we can just do a members only thing at the end. If you guys are watching this on YouTube, catch you in the mornings, I guess. Peace. All right.